the recording. We're good. Sweet. All right. So first, let's take a look at, last week we had mentioned, kind of what the prevailing trend was in the market, which was we were looking at quite a bit of dollar strength that was hitting the market. We saw a big turn in the dollar last week, which was helped by our strategy of basically just trading strength and weakness of what we saw in the market. And it turned out to be a pretty good week because, we did see that overall reversal of trend in the dollar. And then dollar still overall really has been driving the market for the last, going back to like last Monday. So you have dollar strength versus the euro, dollar strength versus the Swiss, dollar strength versus the CAD, dollar strong versus the Aussie, dollar strong versus New Zealand, dollar strong versus the yen. The yen was the big mover from the opening of the market. Came down and made a reversal right in through here for about damn near 200 pips. And of course, dollar strong versus the pound also. So looking at these trends, I think that, we still want, even though we see the dollar strong over the short term, the reason why we kind of hesitate a little bit is when you change all these to daily charts, even though there has been some key levels being broken, if I change all of these over to daily charts, the hesitancy is, and the reason why we kind of trade what we see and trade, the trends, how they break out is, long term, dollar's weak, slightly weak, weak versus the yen, kind of sideways versus the pound. So, long term, we see, the dollar still hasn't broken its, there are some pairs like the CAD, the Aussie, and most recently the New Zealand, which are breaking out through some key levels. But still over the long term, we see quite a bit of dollar weakness in the market, which, overall, not to confuse anybody, because, overall what we're still looking for is we're still looking to trade essentially, short-term trend on the dollar, strong, long-term, and long-term is weak. Over the medium term for the last month or so, we're kind of right back where we started at, sideways. But there's no question that the short-term trend is being driven by the dollar. There's no real key news to speak of today. I can kind of go through the global markets are up. Oil's actually up here today. This is from non-farm payroll. I kind of kept this non-farm payroll on here because even with this non-farm payroll number being lower than expectations, we still saw the dollar stronger on Friday. But as far as today, here, I'll even write this on here. Let me write last week. That was kind of the last key news that came out. No significant news today. So technicals are front and center in the market. So we don't have any fundamentals to really worry about today. And still looking at trading trend and counter trend moves on the dollar. So let's go ahead and we'll get into kind of some of the dollar trades that we could do today. Some that I think that could very much benefit us from a trading standpoint of just looking for any type of dollar reversals. The market's still in a state of indecisiveness. There's the volatility is actually pretty high in Forex right now, but liquidity actually, from what I've read, is not as high as it usually is. So, the volatility is really what we're trading. We're looking to trade any type of reversals. We don't really, in markets like this right now, we don't, we like to find what the drivers are, like in this case, the driver is the dollar for the short term. But in cases like this, we're willing to trade the market in either direction, whichever direction the market gives us. For example, kind of an easy one here to look at for dollar weakness or strength would be right here on the euro. You can kind of see the consolidation right down in here. I was tempted this morning because I saw this coming down, but it never closed below this low right down in here. It came down and made a new low right here, which still gives it plenty of room to move to the downside. And then this high right up in here, right above the 114 level. I really like the idea of, you can see that, there's still a lot of buying activity in the euro dollar. I like the idea on a buy entry on euro. You could almost treat this as a double bottom break. And if you're on the PitView, +5 on the 1 hour totals, it's been there once. It almost got there right in here on this last bar. Was looking at quite a bit of strength. It's been kind of hovering right here at the 114 level. But I think if it comes up here and breaks through this high, that we have, quite a bit of room to go to the upside. The stop right in through here. If you look at it, you can put it below the swing low and probably still be in pretty good shape. Putting your stop 1 pip below the swing low, or 50 max. And if we do get volatility to break out to the upside, or any type of dollar weakness, let's continue looking for those 1-to-1, 1-to-1.5 risk rewards. Another alternative for you, if it takes a little bit for it to break out above that high, is just to use a 3-bar reversal. The key level that you'd want to look at is you'd want to look to put in your stop below the 114 level, like at 113.95 or something. But you can also, if it takes a little bit to get up there, I'm not a big fan of, as you know, I'm not a big fan of trading in between right in through here. Just not a whole lot of pips to work with, and especially in an uncertain market. But that would certainly be a nice little dollar weakness scenario for us. So we'll put that under dollar weakness. And it's almost a double bottom. I consider it more of a, you can call it resistance, consolidation, since the market's opened. There we go. And then on the flip side, if you wanted to really just, keep it simple today, you could look no further than the euro dollar. The sell entry on this, I'm looking at that swing low right now as kind of the level that I would like here. Close below swing low. Put your stop. See, in this case, I don't think, since it's already made a bounce, since it already bounced kind of off this lower level right in through here, and this would be the swing high. Stop 1 pip above swing high, whatever that swing high might be. Well, what happened to my sell entry? Whoops, sorry. Sell entry, close. I think you can look for 1 to 1.5 risk reward in either direction. And of course, the same type of scenarios exist, although the correlation is not as high as it normally is, but there is still a correlation between this euro and the Swiss. But I would suggest that you definitely don't overtrade in the market today. But let me go to this Swiss franc right in through here. Swiss actually made some pretty good momentum there on Friday and into the opening. It came right back down, and then here's where we stand. When you look at the Swiss right in through here, you can almost look at this as the same consolidation that we had on the euro, where you could look for dollar weakness on a break to the downside. You could look for dollar strength if it breaks up here above this high. This is one to where, when you look at this is right above the 9,700 level, and this would, this quite frankly would give you a little bit less risk that you put up on the trade. The one thing the Swiss has going for it is that it's not as volatile on the euro. So if you're looking to put lower amounts of risk at play in the market, you don't have to put as much risk up for the Swiss, because it doesn't move. And the Swiss and the euro tend to move, in tandem with one another, but it doesn't move as much as far as pips go. You risk less pips. You also look to make less pips. It's all, Forex trading is all a risk reward game. So, you put up less pips for risk, but you also are generally looking for less pips as far as reward goes when it comes to breakouts on the Swiss. I won't necessarily put this on the trading sheet because this is the same trade as the euro, but these are the levels that you'd be looking for on the Swiss, is to buy above, if it breaks into this high, which would also be a sustained break above 9,700, or sell it below this swing low, which would be a break below that level. Essentially on this Monday, we're waiting to see, is this dollar strength going to continue, or are we going to see dollar strength falter a little bit from last week? That's probably the most simple way that we can put it, is, is it going to break out and continue on its upward move and continue on with its short-term upward momentum, or is it going to reverse course, if you will? There we go. So I can kind of remove those objects from the chart. So euro, dollar, Swiss, those both have the same key levels about them that you can look at. That's really an easy way to look at the market, is you could trade either one of those. Global markets are up today. Oil's actually up a bit today. These commodity currencies are getting a little bit of a, commodity currencies have been extremely weak also to the dollar, with Canadian giving way to dollar strength, Aussie giving way to dollar strength, New Zealand, till it made this big move down, it made a huge move here. Not a huge move, but, about 40 pips in the last 3 hours. It made probably the biggest amount of weakness. It succumbed to weakness a little bit more further than the rest of the commodity currencies. So, looking at the market today, you really want to just be, you want to be careful as far as, what you look for. You just want to make sure that you understand the volatility that could be happening with the lower amount of liquidity, and essentially just use good solid confirmation on these orders once they look like they're going to trigger. The interesting one is the big mover of the day here on the yen. The yen right in through here you can see, with global markets being up, you could call it risk on, driving the yen up here. The yen, it's tempting to want to trade the yen because it has made such large amounts of headway, but truth be told, this is how many pips? This is 200 pips of movement that it's had from this swing low right down in here. You can see all this consolidation that had occurred, and then it finally had a big breakout of this this tightening, this volatility tightening right up in here, and then it had a break for this little pennant formation in here, and then it just kept going and going and going. It's tempting to want to trade that today, but with it running already 200 pips, the question becomes, can it run up even further? It's already broken through so many key levels, 107, then it broke up through 108, and now it looks like it, at this lower range of 108, it looks like it could be breaking out further. It's not a bad currency to look at because of the amount of movement. This is one that I'm always kind of afraid of selling because of the fact that you're kind of going against the central bank, but you can see that it's come up here above the 108 level. The only thing I would look for, and this is not necessarily looking for a total reversal on the yen, but my idea this morning on the yen was not necessarily buying it. Rather, if we are looking to trade the market in either direction, is rather just looking for, some selling to come in. You could almost call it a profit-taking trade. We've had, nice upward momentum here on the LP trend line, and it's starting to break down a little bit here above the 108 level. For as far as candidates go for potential, buying on or selling on the yen, you need to look no further, I think, than this 108 level right down in here. If it closes below 108, a lot of this would come down to a lot of this would really come down to whether, I think if the markets were to sell off at all today, you could certainly see, this yen come down and at least retrace back down and possibly to the lower edge of the 107 level after making such a big move to the upside. The reason why the market makes higher highs and higher lows is because of the fact that those higher lows are generally formed by profit taking. So I'm not looking for an overall reversal on the yen, but essentially for the volatility to simmer down a little bit. But you could put your stop 1 pip above the swing high. A limit, once again, 1 to 1.5. And we might be taking a closer look at the yen tomorrow. I'm sure all the yen pairs have been driven up, like euro yen, and I already looked at those earlier. We look at euro yen, and all the yen pairs have been driven to the upside by this big, volatility swing or this big momentous move in the yen overnight. But I would still favor dollar weakness on that. Because it is certainly certainly in the driver's seat, at least for the last day, but one day does not a trend make. Take those off. So I do favor the yen, but I favor it more to the short side. Let's euro back over, see what's shaking out with that one. Trying to come down. Swiss is starting to come up a bit. And then another one that gets a lot of attention in class is right here on the pound dollar. The pound is one it's hard to gauge it, especially when you look at it over the long term. Short term, you have a couple of things working here on the pound. When you look at it just over the short term, from like this swing low over in here up to this swing high, you have this 78.6% retracement from its lows at the end of April. This is where the real swing. This is where the pound had kind of broken out of some consolidation right in through here and got stronger. Here, let me see if I can zoom in a little bit on that one. There we go. And it's not necessarily a Gartley pattern. You could almost call it one. I mean, 78.6, and it does have a little ABC tone to it, if you will. But you can see it came down to this 78.6 level, which is right at, right around that 4,400 level. And then we got this semblance of a trend line coming down right in through here, which is also would be signified by the 61.8 level. Here, let me move this up a little bit because it should match up with these highs right down in here. There we go. And once again, I mean, the pound, just like the euro, the pound could technically, I think, be driven or be traded in either direction. When you look at it, if I were looking at it for right now, I would say, for the short side of the equation, or going short the dollar, if you will, kind of zooming in here on this retracement that it's had. We've already had several touch and closes off that 78.6. And then it's come right back down to the downside. But you can see where this trend line is right at here, 1.44620. It's all based on just how low, can it possibly go. If you look at this recent consolidation right in through here, this is a lot of pips here between this high and this low. The one thing that's scary about the pound is the volatility, because it can make such big moves. You see these candles, a lot of these candles that you see in here, these are like 50 pip candles. So that's this is about 50 pips. This is 60 pips. That's 40 pips. That's about 40 pips, this big red candle. So when it moves, it tends to move. So you have a lot of volatility built up into it, to where when it moves, it tends to move fast, which means you can either hit your profit points pretty fast, or you can hit your, or you can also hit your, your stops very fast. Along with that, I'm going to take these fib levels off for right now, because they're not really necessary to put them on here. When you look at the pound overall, here's where we found some support right in through here. And this is another one to where you can, conceivably look to trade it in either direction. The one part that gives me a little bit of pause is this 4,500 level right up in through here. It didn't really act as much resistance right up and through there, but, essentially be looking for it to either, come up above and close above the trend line, which would be, a nice little buy signal on it. We're looking for it to close beneath this low. Pound's a scary one, but again, just like the euro in here, I can even take, probably the better trade here on the pound. Let me take this trend line off. If you want to keep things simple, if you're I know a lot of you are big pound traders, probably the best thing to do on the pound Again, if you're looking at kind of multi-directional trading, definitely if it makes a sustained break below 40, below this, below this 4,400 level, which is right, it's not right at this swing low, but if it comes down below 4,400 and starts to break through this low, I mean, I think you'd be in pretty good business here on the pound. Let me actually switch this chart over real quick. Hold on one second. I'm a little all over the map here today. Let me go here and give you a better picture of this. You can see how consolidated it's been down there. So you see this range right down in here. This range, by the way, this is why it's a little scary to trade the pound. This range from high to low is roughly 100 pips. And, you can see this is, had some resistance right over in here, kind of double dipped off of it, right in here, right at 44.77. Right down in here at 43.73 is where it found support. So you had big red candle, big green candle, big green candle, big red candle. So I mean, you had these candlesticks that kind of bounced between this these 100 pips that we have right in through here, and now it's just sitting here, consolidated right in the middle. My thought would be, you'd have to use kind of a max stop on these, but I'll just put this. You can certainly look to trade the pound in either direction. Note how I'm looking at closes here. I would say that this is where it gets a little bit, risky because of the 100 pip range that it's had already today. But, put in a 50 max on your risk, because if it does break out, I mean, the chances are that it's, it can make a directional move in one direction or the other. It can either make a move to bounce off the 78.6 and the 61.8 level and head higher, or it can certainly break down through this low and come down and challenge the 100% retracement level, which would still be, if you were risking 50 to make 75, which would still be, quite a ways away from where the market is, from the current levels. But the one thing you can count on is the fact that when it moves, 75 pips is maybe an hour and a half worth of movement based on these current candlesticks on the pound, especially now that it's Monday and we have, a little bit of volatility starting to come back into the market. So we're already trading the euro in either direction, but since the stops are pretty simple there on the pound, so there's no need to overthink that one. I just say put in a 50 pips max stop. You prefer your stop to be above and below some key levels, but that's not always the way to trade it, because we have to manage our risk effectively. And then last but not least, I know a lot of us have been looking at these commodity currencies. That's my play for kind of the big four, if you will. When it comes to the big four liquidity currencies, looking at these three right in through here, New Zealand, Aussie, and Canadian, you group these all together as being, the commodity currencies, and they're all kind of going their own way at this point. Out of all these, I think the one that made kind of the prettier move this morning, I can't believe I just said pretty, but but you know what I mean. But I just don't like, how where it's trading right now is here on dollar Canadian, because this had quite a bit of volatility, and oil was up earlier in the day, but now it's down like 1%. And markets just now opened. The global markets have been up. The Dow is starting to make a turn. It's down like 14 right here, about 1 minute into trading, but not everything has opened up yet. Oil was up, and now it's kind of erasing all the gains that it had per the TV. Down 13. S&P is down barely, about down 0.34. So not a big volatility, and not a huge amount of volatility hitting the stock market either this morning. Okay, let me zoom in here. We already had a break here on the CAD, and the CAD is another one to where it can be extremely volatile. Somebody had asked me about the CAD earlier because here's where it opened yesterday. It kind of gapped up and then came right back down. Oil prices started to go up. CAD started to get stronger, and then it seems like the last couple of hours where it's kind of broken out here, oil has made a bit of a turn from being up to being down, so that's helping to weaken the Canadian also. But this 3,000 level right up here on the CAD, I know that's asking for a lot of volatility from the market for it to go up above this 3,000 level, but it could very well come up and hit its head off that 3,000 level. Here, let me erase some of these. I'll turn this into a daily chart. See, right in here is, it broke down below 3,000, came up and challenged it once again right in through here before breaking down, and now we're coming up and challenging that 3,000 level once again. The 3,000 level has acted as, you look down in here at this bottom that it made on the daily chart. Came down, came below it, came back up. This is actually a news announcement right in through here, but you can kind of see that it's not a pretty level, but it's certainly that area is where it's certainly found a large amount of resistance and support. From a trend line standpoint, you can see it's starting to make a break, above, it's been making a lot of sets of extreme lower highs and lower lows right in through here in its downtrend line. And it's broken through at this point any type of trend line that you could draw, straight down. If you were to draw a trend line straight down through here, there it is. It's broken through all of that. But the level that I would look at here for kind of a true reversal, when you kind of look at it, see how it's broken up through that trend line, would be right there at that 3,000 level. So if you are looking at commodity currencies, it's not that I'm staying away from oil, because oil can be volatile, but now that it's made that break, it came up, broke above 2,900, has just been kind of hovering there between those levels. Question this week is going to be, how much volatility these things are going to offer out. For right now, though, I would look for, on the Canadian anyway, I would look for buy entries above that 30 level. If it can make a break and sustain a break above that 30 level, I do like that level, since it is kind of making more of a bullish breakout above its trend line. Commodity currencies have been really weak. So Aussie, New Zealand, they've all been extremely weak. You take all these other objects off the chart and just focus in on this 3,000 level, which it may not even come close to touching it, or it may not even make a break. But if it does, this would be much like the pound because of the volatility involved in it. Put your stop, 50 max. A limit of 1 to 1.5 risk reward. Since the commodity currencies seem to be the ones that are giving into dollar strength the most, that is one of the reasons why I'm pulling that one up as far as a nice directional trade for trading into dollar strength. There we go. And even with all the oils down now, even though the Dow is up, oil's down. Dollar's surprisingly been strong since last week. Technicals front and center because there's no significant news today. It's kind of a slow week up until, like, I believe it's either Wednesday or Thursday. Not a huge amount of news coming out in the market this week. If you kind of take a look at like Forex Factory, New Zealand has some stuff coming out tomorrow at 5. But you don't see a lot of red on here until about Thursday, where the inflation report, that inflation report that Carney submits to the Prime Minister or whatnot, that's huge. That can always lead to a huge amount of volatility. Now, the inflation report is where they talk about things like consumer price index. Carney's coming out and speaking at 7:45, all during this time this is always a big driver of the pound right in through here. It's not necessarily their interest rate decision, but the inflation report and what Carney comes out and says can often lead into a huge amount of volatility on the pound. I mean, we've seen it before whenever that inflation report comes out, because one thing about Bank of England and the UK is very much a consumer-based economy. So whatever happens from a consumer standpoint with inflation is a big barometer for their overall strength or weakness in their economy. As far as their inflation goes, much like the U.S. And they've already stated that their next move on interest rates would be to raise them at some point. They're not going to lower them anymore, but they need to keep an eye on their CPI, their consumer price, and their inflation. So that's a big one. A lot of times in this BOE inflation report, one of the main numbers that Carney mentions is the CPI number, the consumer price index, because they are such a consumer-based economy. So that's something to look out for when Thursday comes around. But you can see up until that point, besides New Zealand, there's not a huge amount of news coming out, so we can look at this being more of a technical market up until that point. Let's just take a snapshot. Let's get all these other currency pairs up in here. See what's shaking out with some of these. There we go. Pull the euro back up. So we really haven't had from a volatility standpoint, we haven't had any big moves up in here at the market open. You can see I haven't put really anything on here from a retracement standpoint, mainly because a lot of these moves, Monday is generally the day where we'll get, the market will tend to give us its direction, if you will. So all these trades is what you would qualify as momentum trades, or breakout trades. We're not really looking at any retracements. We're just waiting for the market to tip its hand and say, okay, here's the direction we want to move these things. And once they do give us that direction, that's what we're really going to be jumping into today. But so far, not much swinging here. Here as we approach about 20 minutes into 10 a.m. So proceed with a little bit of caution here, but don't be afraid to jump in on any of these, any of these breakouts really. And if you want to keep things just really simple, if you want to keep things just focused and simple on the market today, just focus on the euro dollar. That's probably an easy thing to do. You can see if this goes -5, it's going to be breaking down lower lows on that LP trend line that I know a lot of us look at. And so, I mean, if it can break down, sell it. If it breaks up, buy it. I mean, it's only moved about a total, the reason why we like the euro dollar, it's only traded, it averages a little bit over 100 pips a day in movement, and it's only moved a total of, what, 45 pips so far. So, a breakout in either direction would certainly be, you have a lot of room to go. So if you just wanted to stay focused today and just pick one pair to look at, the euro you can do, I don't think you can go wrong with just looking at the euro dollar if you would just wanted to look at this one for trading in either direction. I mean, it's just a simple consolidation breakout. Treat it like a London momentum. Whichever way it breaks, whether it be through the high or through the low, that's the way you're taking it. So anywho, let me go ahead. I'm going to pause my screen real quick. I'll go ahead and save this. One of the other reasons I mentioned the non-farm payroll last week is even as horrible as a lot of people thought it was, I don't think there's any denying the fact that the dollar still held up very well. We didn't get a huge sell-off or anything in the dollar. Let me go ahead and give you this. There we go. I'll go ahead and stop the recording.